So first off, a huge thank you to my tax accountant for helping us get this chat together today.
Of course.
We're going to jump right into the Spring Statement 2025 and break down exactly what it means for all of us taxpayers here in the UK.
Yeah.
You know, global economics are a bit shaky right now, so the government has laid out this plan to hopefully steady the ship.
Exactly.
Let's get started.
Right.
The Chancellor talked about this whole idea of aiming for economic stability.
Right.
And he mentioned the government's commitment to some financial rules.
Yeah.
Can you break those down a bit for us?
Sure. So there's a couple of key ones. There's what they're calling the stability rule and the investment rule.
Okay.
The stability rule basically means the government's aiming to balance the books by the 2029-30 financial year.
Okay.
So in other words, making sure that day-to-day spending is covered by the tax revenue coming in.
Oh, I see.
And the Spring Statement is saying that the government is actually in a good position to do that.
Right.
The Office for Budget Responsibility.
The OBR.
Yeah, the OBR, they're the independent body that forecasts the UK's public finances, right?
Right.
Well, they're predicting that we'll shift from a deficit to a surplus in the coming years.
So by 2030, the plan is to actually have more money coming in than going out.
That's the goal.
So what about this other rule, the investment rule?
Right. So that one is all about the UK's national debt,
Okay.
aiming to bring down the net financial debt as a percentage of GDP by the end of the forecast period.
GDP meaning?
Gross domestic product,
Yeah.
which basically represents the size of the economy.
Right. Right. Of course. Yeah.
And again, the OBR expects this rule to be met sooner than initially planned.
Okay. So we're on track for both of these rules, it seems.
Looking that way, yeah.
Now, what really stood out to me in the statement was the massive amount of money spent just on interest payments for this debt.
It's a huge figure, isn't it?
Over 105 billion.
Yeah.
That's more than the entire budgets for defense, the Home Office, Justice, all combined.
Absolutely. It shows you the scale of it.
So by lowering the amount of debt, the idea is we'll have less need to borrow, and then that frees up money for other things.
Exactly. And it reduces that financial burden in the long run.
Right. Okay.
And on that note, the Chancellor also emphasized that there wouldn't be any new tax increases in this statement.
The good news.
Yeah, sticking to their previous promise on that.
Okay. Good to know. Now, something that's always a bit of a hot topic is tax evasion and avoidance.
Yeah.
What's the latest on that front?
Well, the government has been pretty clear about their commitment to cracking down on tax evasion.
Right.
And this Spring Statement builds on what they've called the most ambitious package ever of measures they introduced earlier.
So what's new this time around? What are they doing to really clamp down?
The main focus is on investing even more in HMRC.
His Majesty's Revenue and Customs.
That's the one.
Right.
And specifically investing in their tech capabilities to help them better identify and prevent tax avoidance.
Makes sense.
They're also aiming to increase the number of people charged with tax fraud by 20% each year. And they expect these efforts will bring in an extra £1 billion in tax revenue.
Okay, so more resources, better technology, all aimed at making sure everyone's paying their fair share.
Exactly.
Now let's talk about the welfare system.
Okay.
There are always some pretty significant proposals in this area.
Yeah, often quite a bit of change there.
What's the big focus this time?
Well, they're aiming to reform the system in a way that encourages people to work
Okay.
while still making sure those who genuinely can't work get the support they need.
Right, find that balance.
Exactly.
So what changes are we looking at that would directly affect people receiving benefits or who might need them?
So one key change is an increase in the Universal Credit Standard allowance.
Okay.
It's going up from 92 towels a week right now to 106 towels a week by 2029-30.
That's a decent increase.
Yeah, it is. But there's also a change to the Universal Credit Health element for new claimants.
What's happening there?
They're going to cut it by 50% for new claimants and then freeze it at that lower level.
Oh, wow, that's quite a change.
It is. This adjustment to universal credit is partly about addressing concerns that the system might sometimes discourage people from working.
So the idea is to make it more financially beneficial to go back to work.
Exactly.
Now, I know there's also talk about investing in helping people get back into work.
Right. They're putting £1 billion towards providing more tailored employment support.
And that's on top of the money for the Department for Work and Pensions and Job Centers to actually implement all these changes.
Yeah, they're getting around $400 million.
So how much is all this expected to save in the welfare budget?
The OBR estimates it will lead to savings of £4.8 billion by 2029-30.
Okay, so significant savings there. All right, let's shift gears a bit and talk about public spending and investment.
Go.
Any major changes in priorities?
One of the most notable shifts is the increase in defense spending.
Okay.
aiming to reach 2.5% of GDP.
And that'll be funded in part by a reduction in overseas aid.
Right.
So a bigger focus on defense and less on aid, that's a pretty clear change.
It is. The statement also mentioned a saving of £2.6 billion in day-to-day spending.
Is that connected to the aid reduction?
Partly, yes, but they're also looking at ways to be more efficient and productive across all government departments.
Right, trimming the fat, so to speak.
You could say that.
Now, this is where the new transformation fund comes in, right?
Exactly.
What's the point of that?
It's a $3.25 billion investment specifically for delivering reforms across public services.
Okay.
The goal is to make those services more efficient, more productive, and better for the people who use them.
So ultimately trying to reduce long-term government costs.
Yeah, invest now, save later kind of thing.
What are some examples of how they're using this fund?
So they're allocating money for things like voluntary exit schemes in the civil service.
Okay.
They're adopting AI tools to modernize processes, upgrading technology in the Ministry of Justice to improve probation services, and putting money toward supporting more children in foster care.
Seems like a pretty wide range of initiatives.
It does, yeah.
So even with all these efforts to find savings and the change in aid spending, is the overall day-to-day government spending still going up?
Yes, it is. The plan is for it to increase in real terms each year,
Real terms meaning?
taking inflation into account.
You've got it.
Although the rate of increase is a bit slower than they'd previously thought.
Okay.
And on top of that, investment in infrastructure and capital projects is set to rise too.
By how much are we talking?
Compared to the autumn statement, they're now expecting capital spending to increase by an average of £2 billion a year.
All right, so more investment there too. Now let's zoom out and look at the overall economic forecasts.
Okay.
What are we looking at in terms of growth?
Well, a few factors are at play here, including the Bank of England's recent decision to cut interest rates.
Right, which is meant to encourage borrowing and spending.
Exactly. The OBR is expecting inflation to average around 3.2% this year.
Ouch.
Yeah, but then it should drop significantly to around the government's 2% target from 2027 onwards.
I think a lot of people will be happy to see inflation go down. So what about GDP growth? How's the economy itself expected to perform?
The OBR has actually lowered their forecast for 2025 from 2% down to 1%.
Oh, not great.
No, but they've increased their growth projections for 2026 and beyond.
Okay, so a bit of a dip and then hopefully things pick back up.
That's the general idea.
Now, something I found interesting is that the OBR thinks those planning reforms they made are going to have a positive impact on GDP.
Right.
Can you explain that a bit?
Sure. So they estimate that the changes to the National Planning Policy Framework will lead to a permanent increase in real GDP of about 0.2% by 2029-30.
Which translates to?
Roughly £6.8 billion added to the economy.
Wow, that's not insignificant.
No, it's not. They also think this will help to boost house building.
More houses, that's always good to hear. So how does all this affect the average person's finances?
Well, the OBR is forecasting growth in what they call real household disposable income,
Meaning?
the amount of money people have left after taxes and taking inflation into account. And they're projecting that people will be over £500 a year better off on average.
Right, so some potential positives there. Okay, so to wrap up, what are the key takeaways from this spring statement for us regular taxpayers?
The big things to note are no new tax increases,
Good.
continued focus on tackling tax evasion and avoidance,
Right.
significant reforms to universal credit,
Yeah.
and a slightly lower growth forecast for next year, but improved forecasts after that with inflation expected to fall.
Okay, and you mentioned something about changes to late payment penalties.
Oh, right. Yes, there are increases for VAT and income tax self-assessment taxpayers as they join Making Tax Digital.
Making Tax Digital being...
It's a government program that requires businesses and individuals to keep digital records and submit their VAT and income tax self-assessment returns using compatible software.
Ah, okay, got it. So those changes to penalties are something to be aware of.
Definitely.
So overall, it seems like the government's focused on keeping things stable with their financial rules.
Yeah.
Boosting the economy through investment and reforms.
Right.
And making sure everyone's paying their taxes.
It's a lot to take in.
It is. It's a pretty complex picture.
Yeah, and it's going to affect different people in different ways.
Absolutely. Well, this has been a great overview of the Spring Statement 2025. Thanks again to my tax accountant for setting this up.
You're welcome.
And for anyone listening who wants to dive deeper into how these changes might affect their own situation,
Right.
definitely reach out to the experts at my tax accountant.
Good advice.
They can give you the specific information and advice you need.
Absolutely.
Thanks for joining us.
Thanks for having me.